So I'm here with Krystle, and today we are talking about what millionaires understand about this housing market that the rest of us might not. Because what we're seeing out there, and I mean, I hope you're seeing this too, is that it's a really active market when you're in the million plus price point of homes. And people are not letting, interest rates or headlines, right, scare them from action, right? I think that's what people are kind of like frozen right now and not acting in certain price points, at least.
Right.
A lot of people in that middle price point, 700 to a million is a very different market than under 700 or above a million. So, what do you think it is what's the wisdom that millionaires have, right, when they're out there shopping and making offers on $1 million plus homes right now?
I think some of that wisdom is high risk, high reward, right? And of course, they have the ability to do that higher risk right now, but you have to start somewhere. And so to get your foot in the door, sometimes you have to take that bump. You have to somehow find a way to make that higher payment with even your first home or your second home in this market, and then stretch yourself, stretch your ability, because then that incrementally goes up in value if the values go up. And considering the fact that that luxury market is staying so strong, that tells me that the values aren't going anywhere. They're not going to go down. We're not going to have a big dip like we did in 2005, 6, 8, I guess, is when it all started to drop.
Right. I think that they can look at things in a broader picture to understand. Like, one statistic I've heard is of the last 6 recessions, right? 5 of those recessions, the housing values actually went up during that recession. So, real estate's a great hedge against inflation, right? We're dealing with inflationary factors right now. So what's the way to, have your money in the market somewhere, right? And what's the safer area, right? Or maybe spreading your money out in multiple areas.
Right.
And just knowing, if there's inflation or other economic uncertainty, real estate is probably a fairly safe bet, at least relative to some other options.
And it's a long-term investment. Sometimes we're kind of used to the COVID years where it felt like a very short-term investment, a big one. But really, that's not how you're supposed to look at real estate. It's really supposed to be a long-term, safe investment because it is a hedge against inflation.
Right. I mean, if you wanted to day trade with real estate, you're going to be a very unique
right
buyer, seller, investor, right? But most people, I tell, especially with first-time home buyers, are you pretty confident you're going to still be in this home in 5 years or in the area in 5 years, right? Because if you think you're going to graduate in 2 years and take off to Tennessee, maybe you should consider, if that's the case, you should have a plan in 2 years with what you're going to do with your home. Is it going to be a rental and then you're going to, buy your next property in Tennessee? Are you in that position?
Right.
Because let's say we did have a dip in the housing market in this next year, right? And we bought that starter home, call it $500,000 in Flagstaff, and now it goes down to $400,000, right? That's going to take a while to recoup its value, 2, 3, 4, 5 years. So if we have that 5-year plus outlook, we know that we can withstand any ebbs and flows, right? The cyclical nature of the market.
Yeah, and understanding that up front is really important. Like you said, what is your 2-year plan? What's your 5-year plan? And maybe your 10-year plan, because it would be a different property that we would want to look for based on that.
Right.
And obviously life changes. Things come up and people's plans change. But having that understanding up front will help navigate that
right
for safer investment and less risk, but still a good reward.
Right. And I think another thing is that millionaires aren't waiting for the economy to be all perfect, right, for their lifestyle that they want to have. Right. And I think maybe first-time home buyers kind of have that blissful ignorance that's like, oh, I need a home for my lifestyle to change, right? And then what they learn in that process through that, great mindset is that, wow, now that I have my first house, right, I'm that much closer to having my next house or my dream home, right?
And the lifestyle that I want that goes with it.
Right, exactly. So your lifestyle starts changing, right? And when you own real estate, you are learning financial responsibility, and you are going to be wealthier in the long run, just from going through that whole process.
Kind of goes back to what you said earlier about having money in the market somewhere. If you're just renting and not doing any kind of investment, then you don't have money anywhere in the market, and that money just goes.
Right. Yeah, and I think it's fair for people to have concerns in certain times in their lives and in certain economic conditions. But I think, if you listen to the very wise people that have been very successful, let's just say Warren Buffett, right? He says, be greedy when people are scared and be scared when people are greedy, right? We saw a lot of people trying to be greedy when everybody else was being greedy in the COVID years, and the market's going up 20% year over year.
Right.
Right. And then some people, they're like, oh man, my vacation rental isn't making $5,000 a month anymore. It's making $2,500. Like, what now? Right. It's like, well, you're being greedy when everybody else was being greedy. But Buffett would be like, hey, the market just dipped 10%. Let's buy all the stuff. Right.
Right.
So,
and maybe that's what the luxury market understands, right? Because they're still going. They're keeping strong. Maybe not greedy, but they are investing their money in it. Right.
Yeah. All right. Well, thanks for tuning in today, and we'll be back out with you with another video soon.